Hey guys, happy Monday. Sorry I'm a little late. We have some things to talk about, and I will show you the agenda right here. But really quick, let me know in the comments. I'm going to put a statement up there because the economy is economying. And I want to start out by asking, yes, I have things that we want to talk about, about three topics. But really quickly, how much money have you lost in the stock market this past week? If you are a replay gang, please let me know in the comments. I'm about to share my answer probably in the next 30 seconds to a minute. But yeah, I think it's important to share because we need to talk about how we're feeling about this. So how much money have you lost in the stock market this past week? What I am going to talk about after that is how U.S. companies are scrambling to profit after tariffs have been imposed as of April 2nd, and we are on April 7th today, so almost a week. China is leaving America, and that's a interesting little title, but you'll understand when I get there. Like, they're kind of like, okay, girl, we know where we're not wanted. And the last thing I want to talk about is that 401ks are being used as emergency funds lately. And that's going to be a little tough love section. So as far as how much money have you lost in the stock market this past week, I will start by saying that I have lost, drumroll, $6,000. And how do I feel about that? I feel like it's not fun, but I also know that this is part of the process. This $6,000 is specifically for from my 401k. And if you've been hanging out with me for a while, last year in 2024, I crossed the six figures mark and was able to reach $100,000. It was a little bit more up until I lost the $6,000. I'm still in the six-figure club. But if this is anything like 2022, where I lost over $20,000, it's going to put me back into the five-figure club. And yeah, before the election, I was trending to reach about 135K. And now I honestly do not know where it's going to go. But in the next breath, I can say that that's part of the process. And I'm glad I'm this age and not 62 or 60 or 65, because those people are more concerned. They're getting ready to retire and they don't know. There's actually another YouTuber that I subscribe to. Her name is Shalise. She does a lot of dividend investing and she talks about it. She just announced today that she might have to push back her early retirement. She just started her 40s, her and her husband, and they may push it back a little bit. And that was sobering because she's been talking about this for a while, but they are responding to what reality is right now. You know what I'm saying? So it's just a sobering thing that this is happening. It is Monday. The stock market, I think it's around like 37,000. In the morning was like 36. It's still down significantly. And we are, I believe, between 5 to 10% down at the moment. And who knows what's going to happen after. Right. As far as my first thing that I want to talk about is that U.S. companies are struggling to deal with the tariffs because the tariffs can be as high as 75%. April 5th was a day where everything went to crap in the stock market. And last week, the high was 42,214 and the low was 38,314. I think that low was last Thursday. Friday, it went lower. And on Monday, it opened up at like 36 or 37,000. And as a consequence, major U.S. brands have tried avoiding China being hit, but the president announced that tariffs are almost worldwide. And when I say they try to avoid the tariffs, I mean that instead of being with China to do their manufacturing, because they don't do manufacturing like they used to in America, they decided to subvert the tariffs that were coming, and they started investing in having supply chains come from India and Vietnam, I believe. Yes, 46% came from Vietnam and 26% came from India. Now, these companies were thinking that if they invest a lot of money into these other countries, when China is hit, they won't be hit as bad. But our president has decided that everybody can get it. So that leads to the question of where do these companies go now geographically? And it's a perplexing stance to be at because our president says he wants more jobs here in America. That's the whole point of this tariff thing. His stance is America is at an unfair advantage. We are being taken advantage of economically, so he wants to even the playing fields. But what he says is not what corporations have been acting on for decades at this point. Corporations tell us time and time again with their actions that they don't want jobs in America. And I'm guessing it's because it costs too much. They can get labor done for pennies on a dollar there versus the dollar that they have to spend in America. So I don't know how this is going to work when he is the leader of this country at the moment, but our infrastructure has been for years going in a different direction. I don't know how that's going to work out. So only time will tell. He technically only has a little bit less than 4 years to get this right? So I don't know if that turnaround is going to make all the companies put billions of dollars back into America. Because if the next president is okay with free trade, the trade's going to open back up. And I did see a comment from some, I don't know, high executive that says America first is fine, but not America alone. We're going to talk about that a little bit later. As far as like the first week for corporate, it has not been good. Name a lot of these companies are struggling. Nike was down 15%. Home Goods, which is the conglomerate that is where you'll find Ross, you'll find TJ Maxx, you'll find Marshalls. They were down 42%. And I specifically understood this because a lot of times when I look at those things and I'm perusing, a lot of that stuff says from India. So that made sense. That they're going to suffer that stock is going to suffer. Levi's is down 11%. Gap is down 22%. And Target is down 12%. Walmart is still doing okay, but not good. Which leads me to the next topic where they're talking about China is abandoning American investments. They started after the election. They immediately banned certain minerals being available to U.S. They decided they were not going to help U.S. get access to that through them. And as of lately, I don't know if you guys saw in the news, but they're making direct economic deals with other countries. So we are like literally out of all the deals, and we're literally out of all of the conversations that are being made about trade. We are being excluded. First example is Mexico. And the other one I heard is Japan and South Korea and China just made an economic trade deal. I'm a history major, currently going to school. I'm a history major, and I'm learning a lot about Asian history. Those companies generally do not mix. So for them to be able to come together says a lot about how American relations are going to be. And when I spoke a little bit earlier about how this high executive was saying America first is fine, but America only is not, this is what he's talking about. He is concerned, as well as a lot of rich Americans are concerned, that we are going to be left out of the conversations. And America historically does not like that. They technically like to be the head honcho in all the conversations, and they have everybody else come to the table and they have to listen to America. But China is saying, okay, no, you don't want my business, I'm leaving. So the particular article that I saw was titled, What China is Signaling by Restricting U.S. Investments. And once I perused a little bit, the part that I found interesting, it says that China's dependence on the U.S. market and export-driven economy makes them particularly vulnerable to President Trump's trade policies. This article actually was like a 2-minute video explaining it, but America is China's biggest export market. And with the America abandoning China, the Chinese government is restricting their companies from heavily investing in the US. They're officially telling them investing is going to leave you vulnerable, right? And that's where we are. It looks like we are being put in a corner, and the rest of the world is kind of moving on without us. That could be positive, negative. I don't know. It's too early to tell. We're only in, what is it, month 3 of this administration, but that is a consequence that we have to think about. And then the last thing is that 401ks are being used for emergencies. And this is a little tough love segment because we have to talk about how they are not for emergencies. This article stated here that Vanguard finds more Americans are treating their 401ks like emergency funds. But tough love, they're not for emergencies. And we know that they're not for emergencies because the government punishes us if we use them for that. 2 ways. We get a 10% charge and we are taxed on whatever we take out. So if I were to take out $10,000, I have to pay $1,000 just because I took it out. So that's $11,000. And I have to pay income tax on like whatever my salary is. So let's say it's 15%. That's $1,500. So for the $10,000 that I took out, I'm really paying $12,500 for it. Something that the article said is that, what was it? We are at 4.8% in 2024 of people taking out funds from their 401k for emergencies, and that's up more than 1% in 2023. That is not a high amount when you think about it, almost 5%. But if it's going up, 2025 is looking like it may be dire as well. And that's why I wanted to talk about it, because we have to figure out another way to pay for our emergencies. I don't know if that sounds harsh, but it's a reality. Specifically, what a hardship withdrawal is a one-time withdrawal from your 401k for an immediate and heavy financial need. And it's the amount necessary to satisfy that financial need. So I don't know the specifics, but it looks like they don't ask questions. You just have to justify that financial need. And I do know there was some legislation a little bit post-COVID that made it even easier. It was COVID related things because a lot of people were out of work. And it was also natural disaster related things because we got a lot of hurricanes. And I know about that specifically because I'm a Floridian. And so that was something that was talked about in Florida news, right? But when we take out money from our 401ks, it has a devastating future value cost. So with that last example where I said it was $10,000, it really cost me $12,500. The future value, since I am in my late 30s, I looked at the wealth multiplier. For every dollar that I take out of my account, it's $10 for future value. So $10,000, that's my number I'm using. It really is $100,000 from when I'm 65. And let's double it, because I feel like I wouldn't take out $10,000. I would take out $20,000 if I'm going to do it. That comes out to $20,000. I mean, $200,000 when I'm 65. That's crazy. So it's $200,000 plus the 20 and the penalty. So it's like $250,000. I'm gonna be a little dramatic, but yeah, we can't be doing that. 401ks are not for emergency. Things that are for emergencies are an emergency fund. Number 1. Number 2, picking up more shifts if that's possible. Number 3, finding another job. But we cannot use that. And it hurts my heart when people say that. I was actually talking to someone at my job. He was thinking about doing it to pay off his car. No. I think he listened to me, but we don't do that. Like, pick up some extra shifts. That's available at our job for the moment, as long as we have a job, right? I did find something out, though, that I thought was pretty cool. And the cool thing is that it is possible to withdraw $1,000 penalty-free once a year. And that can be for personal or a family emergency, but it must be paid back within 3 years. So, I mean, I don't know. I'm not going to say I'm opposed to that, because $1,000 is helpful. You know what I'm saying? Like, that is helpful. And if there's no 10%, penalty, and it's not taxed as long as I pay it back within 3 years. I can pay back $1,000 in 3 years. That's $333. Where's the calculator? 333. Wait, no, let's do 1,000. Let's say divided by 35 months. That's $28 a month. I can afford that. That's free money. So I'm gonna think about that. I thought that was interesting. So I mean, you can do that. Like $1,000 will pay for a lot of stuff, like mini emergencies, like a car emergencies, or like a car emergency, or something in your house, a plumbing issue. I don't know. Just think of random things that could be done, but nothing more. And then I'm gonna wrap up, like I always wrap up. What's up? What's up? What's up? Hi, Chatford. How are you? Nothing much. Just doing my show. How are you? How was your week? My question I said was earlier, since you came in later, I was like, how much? Let me go back. How much money have you lost on the stock market this past week? And everybody's shy. Chatford's not shy though. Chatford, I lost $6,000. Let me know if you're willing to share. Or are you not looking at the stock market because you just don't want to know? I understand that too. But as far as like giving myself a raise this week, I reinvested my 2025 Q1 dividends. I don't do drip every week when I get it. What? Dang. Yeah. 11K. I'm sorry to hear that, but we're gonna get it back because we're not gonna touch it. But I find comfort in knowing that, you know, other investors, it's part of where we're at. We're at that moment right now. We're just gonna be losing money for a little bit. As long as we don't do anything crazy, we'll be okay. Still buying more. Yes. Still buying more in the dip. Wish I had more. Same. I wish I had more. Speaking of starting my position in April, that stock used to be 120 when I first saw it the latter part of last year, and I just bought it for like, I think $75. So almost 50% off. So I just wish I had more money, but I don't. But I did reinvest my 2025 Q1 dividends. It was $12, but I am not going to be sad about my small beginnings. It's $12 right now. It's going to be $200 in a few years. Exactly. I'm in it for the long haul, not pulling the money out. Exactly. Same. Same. That's it, guys. Thanks for hanging out. 5 people. Y'all are shy though. I'm talkative. Don't be shy. Talk to me next time. I'll be back next week. I will see y'all next time. Thanks, Chad, for always, you know, checking in with me. Yes, SGHD with the dividends. Yeah, I think that's a good move. And I think in 2026, I'm going to have a higher SGHD dividend. You too. All right, guys. Bye.